Well, good evening, all. Ira Epstein with your Spider ETF stock market wrap-up for a wild and breaking day for this Tuesday, September 3rd, 2024. You know, we've been talking here about the ugliness of the month of September, where it's often the worst trading month of the year. I did not think we were going to start off with a huge break today. I did expect that bonds and notes would be active because there's been a tendency that the day after Labor Day is one of the busiest trade days of the year for corporations to go out and float debt. And that happened today in a monster way. And I understand it's the biggest day of the year again. So we did that last year. We did it again today. We saw a fleet, if you will, into some bond BND. And I'm covering that today for you, so we'll cover that chart. When we take a look at the stock indices, they got smashed. Tesla's down, gold down $1 today. Not a crash, but down. But this market got knocked pretty good. I mean, that's a 10% drop today in NVIDIA in a rounded figure. Amazon got beaten up. Look at Netflix, $26. Yeah, that's quite a bit, all right? Schwab beaten up, Home Depot. I mean, nothing was really safe as you go through it. Uranium's, again, falling apart. Remember, we were just talking in Rivian, can it get down to that 1260 level? It's not too far away. That's where I look for the next support. But all the metals got hurt. And one of the tones that set this off is over the weekend, if you saw Chinese manufacturing crashing, copper consumption down, energy consumption down. So what are the big exports right now? It's been copper, and China consumes 50% of the world copper. Well, if they don't need as much, why is copper trading where it was? Goldman today rewrote their playbook and said they expect now no big recovery in copper this year. So that's very important. They've lowered their numbers rather dramatically. On the energy side of it, you can see if China's got problems, how much oil can they be buying? That's not to say other parts of the world won't buy. It's not to say that Libya didn't lose 180,000 to 300,000 barrels a day. They have. But that's also being made up by increased production about to take place in other OPEC members, as some members like Russia and Iraq also cut back a little production. But we're there. The U.S. is just going gangbusters, and non-OPEC countries have increased production. So the world, I don't want to use the word awash, but there's plenty of oil, no tightness in the market, and that's something to consider. When you look at BND, the market has come up here, and now you're in a congestion area. I think that's the best way to describe it. The current pattern has had lower highs and lower lows. By most definitions, that's a downtrend. You'd have to get over 74.84 in order to break that downtrend. You see that right through. No, it's actually 74.64. So if the market gets over that, you negate the downtrend, but the big support's right here. The 18-day moving average of closes, I think that's very clear. So you've had a market that's had a bullish bias, bullish because the market has stayed over this 18-day average since early July. And you're coming back to challenge that support for the first time. That is often where the market likes to pause and decide what's it going to do next, and that's the pattern that I'm seeing. The market had been with an embedded reading that it lost, and the goal was to go to the closest moving average. When that occurred, you're there. So now the market has to tell us what is it going to do next. Well, I can tell you this looking at it, and we'll stop right here. The market is going to look very hard at this. It's going to look at the U.S. Mortgage Bankers Association numbers. What are people doing with mortgages? Trade balance data, the Red Book. But here's what they're going to start looking at tomorrow. The JOLTS report. That's Job Opening and Labor Turnover Survey. You want to dive into it. When it comes out, my paid subscribers to my services I'll send this out to them, so they'll get this. All I need to do is see it on the internet, and as soon as I do, I'll copy and paste it and send it out. U.S. factory orders at 9 o'clock, and we're getting to get API numbers. Now, before I get back to the chart, I want to remind you, and I just mentioned it, you know, this is when we're having our Labor Day sale. It goes until the end of this week. my 3 months of complete futures, where you get twice daily updates. And I mention futures to you here because if you're trading stock indices, you're in the futures business because they're based on that. TLT, BND, all based on this. GLD, COPX, SLB, all based on it. So instead of $180, $99, you get at least 7 newsletters a week, daily updates if I see something to do intraday, and with it, you get my morning subscriber video. Now, in my subscriber video for both SPDRs, ETFs, and the futures, whatever open trades I have, I cover there. I'll start you off, and they'll be in a spreadsheet, point of entry, idea, where to take profit, where to have a stop, how to have a stop, what to do. I follow the trades from beginning to end, all the way through, so you can get the futures video by itself, you can get the futures and the SPDR, which is highly popular, or you can get the SPDR video, and that instead of $48 is $32. So you're committing $32 to get about 66 videos, each about 17 minutes long. I think you'll find it interesting. I hope I can help with it. You can move your cursor to the top for the link. You can call my staff. We don't put the link up here. You'll get to it that way, all right? It's not on the website, so don't go looking for it there. You have to either get it by email or come through this. We didn't make it a page that shows on the website. So let's go back together and go back to BND, which is where we're at. So this is where the battle for whatever next is going to happen. You're getting away from being overbought. Neither number's over 70. When you look at Rivian, I thought the market might return, and I've said this, I've been saying it since you were down here, even though you rallied. I said I thought the market would fail in this rally between the 200 and the 18-day average, and it has. And I still think you can make a return trip, 1265, 1254. But we need to get a market that gives a reason to own it, not just because it's cheap, and I don't see it at this point. CrowdStrike. Market spent a lot of time going sideways. Expect a battle at the 18-day average. You've narrowed in the Bollinger Band so much, I don't think there's much upside right now. And the downside could be between the 18-day average and potentially back into the 239 area or so. In uranium, you had one rally that went to the Bollinger Band, completely let go, everything down, but this is where the shorts are probably covering, and it's certainly being oversold, not an area that I'd be saying go short. In Dell, the market lost its bullish momentum, lost right now, today. Therefore, before this market goes over the highs of just last Friday, I think it'll get to at least the 200-day average, if not the 18-day, and try to rebuild itself from there. I don't see a pattern here. Now, it would be a sign of really good strength if the market didn't do that and took out Friday's high, but I don't expect it. Then you might go to the Bollinger Band high. Home builders today. But real estate is overall doing better. So the real estate sector held on, but the individual homeowners, well, they've had a heck of a rally. So they're coming back here, probably going to have to fight a battle around the 18-day average and see how everything's shaping up. Remember, you have JOLTS report, ADP on Thursday, and on Friday, the all-important U.S. jobs report. That'll set up how the traders analyze what the Fed is going to do. Doesn't mean the Fed will do that, but what the traders think the Fed will do, because all the other news that comes out, probably not going to change the Fed's mind from that. In the home builders, see how they came down here, back to the 18-day average, fighting for direction now. What did do well is XLF. The financial services on lower interest rates should do better. So this is still good. You have the embedded reading. I think the pros are probably buy the break tomorrow in this market, seeing if the market can go back up into that zone there. Wouldn't surprise me. Is there a danger of rotation? Yeah, but I think XLF's giving you a statement. It wants to be strong. Be careful of the industrial sector. It finally lost the bullish reading. Now, we had the August ISM report today come out, and it was bad. But we've had bad ISM reports all the way through here. So now I was reading traders saying, well, that was the cause of the break today. I want to go on record. Nonsense. It wasn't good before. Why is a bad one now that's still bad? All of a sudden the cause of this break. No. I don't think that's the reason at all. On the energy sector, lower highs, lower lows, back into the area that's held the market each time. Now you're going to get, in the morning especially, this lower Bollinger Band is going to move up a bit towards that price. So I'm looking for that to be support. Being support means an area to cover shorts. It is not a sign to go long. So if you're short, that is what I'd be looking at. Gold is nothing. It's just got itself, you can see here, it's fighting a battle, trying to determine what the range can be, what the trend's going to be. It lost its bullish embedded reading finally, but it already went to its support. That was all that it owed. In SLV, a whole different game. You're coming unglued in this market. Now, gaps often like to get filled, so keep your eye on that. If you don't get any more follow through to the downside, you could get back to that 18-day average. But the trend and bias have turned down in the market, led by the copper market, which caught a whole group of traders right here. And I was saying to you, in fact, I said it in the copper chart. I pointed out something last week to my traders. We were doing the morning's subscriber video, and I said, this is the pattern that caught me last time, the chart pattern. I said, if I'm right, it's going to be a bear turnout. It's throwing out a buy signal after a sustained rally. It probably won't hold. And kaboom. Now you're seeing it, and the futures did the same thing. In TLT, lower highs, but you're staying over the 18-day average. So like BND and this want to hold. The bond trade and right here, TLT, want to hold and see what these jobs numbers are going to say. In UUP, which is the dollar, you're getting a heck of a rally in the market, but I think it'll be capped between here and the 200-day average if I'm right. Another from here, 11 cents. That's not very much. And in the FXE, you came down to the Bollinger Band. I'm not looking for it to go back over here. I think the market's going to start fighting for direction right in this zone. So I'm going to repeat. To get, and it's so simple, take advantage of our 3-month special. Move your cursor to the top up here, or go look at the emails that I send out. If you're on my mailing list, you got it. If you're not on my list and you know it, and you can't get to the icon up here, call my staff. They'll take care of you tomorrow during the day, 866-973-2077. They'll get you hooked up. This ends September 8th. We've never done a 3-month special. Seems that people like it. I'm Ira. You take care.